Right, good afternoon once again. Today we're going to be looking at the insurance contract. And the first thing we need to ask ourselves is, who is this insurance contract between? So who are the two parties involved in the insurance contract? So if we look at it very carefully, it's normally between an individual and then an insurance company. So we talk about the insured, which is the individual, and the insurer, which is the insurance company like OUTsurance. So the contract is really taken out to help prevent the individual from losing out financially for any potential losses in the future. So every month, as the insured, I have to pay a premium, a little bit of money, the same amount every single month to the insurer, to the insurance company like OUTsurance. So we get two types of insurance. You get personal insurance and then you get business insurance. Personal insurance will cover things like your vehicle. So if you're in an accident and your vehicle needs to be fixed, your vehicle insurance will cover the cost of that accident. So we call that short-term insurance. Your household items, such as your furniture, your TV, if you have a burglary, you claim from insurance. Again, that is short-term. Then we have a number of long-term insurance policies, and those are things like a life policy or a disability insurance. So just remember, you get short-term and long-term insurances, and you don't have to take these out as an individual. If we look at the business, however, there are a number of business insurances, and we have things like general liability insurance. So if someone comes onto your business property and they fall down the flight of stairs, they were injured while they were on your property, this liability insurance will cover the business. So the insurance will pay out for any damages. We also have some insurances that are compulsory, and really in terms of business insurance, you're going to do a lot of this in Matric. So I'm not going to stay on this slide too long. Right, the responsibility of the person who is being insured. You must read your contract very carefully to make sure what you are covered for. You also need to obey the rules of the contract. And most importantly, with insurance, it really is about utmost good faith. So in other words, being honest. You can't insure a gold ring that's worth 100,000 Rand if actually your gold ring is only worth 1,000 Rand. So you need to be honest about the items that you are insuring. If we look at the responsibility of the insurance company, so the policies must be in the best interest of the insured, of the individual they are selling the insurance policy to. The insured must understand the policy and its requirements. You must be able to answer all those questions as the insurance company. If the insured puts in a claim, so let's say you had that vehicle accident, that claim needs to be processed very quickly so that your insured gets the money out. All right. So the value of the insured items must be updated regularly. If the insurance company does not perform its responsibilities as it is meant to, then the insured, that means you or I, the individual, can contact what we call an ombudsman. Okay, and an ombudsman is like a judge who will then look at the case and say whether or not the insured or the insurer was right. The last thing I just want to highlight is that there are two laws that govern insurance. The one is Long-Term Insurance Act and the other one is the Short-Term Insurance Act. I hope that has given you a good brief outline.